Common rule-based approach never succeeded, and it only gets worse because the problem is more complex. So bad guys still have the upper hand until AI will become the key element that they need to face.
Today, financial crime is evolving as quickly as our digital financial systems are. And no one knows this better than Yaron Hazan. Yaron has spent much of his extraordinary career combating increasingly sophisticated threats. Today, he serves as a VP of Regulatory Affairs at ThetaRay, a software provider pioneering new uses of AI and machine learning for financial crime detection and anti-money laundering. In this episode, Yaron discusses his career journey and the unique vantage point it gave him in compliance and risk. He also shares why ThetaRay's preventative approach grabbed his attention and how AI can outpace complex financial crimes. He also highlights the crucial role of global cooperation and adaptation in tackling the intricacies of this widespread problem. This is BCG on Compliance, a podcast that explores today's most pressing criminal trends and how compliance professionals are adapting to stay ahead of that curve. I'm Hanjo. This is the first episode of our brand new season. Over the next month, we'll be looking at a range of innovative new tech aimed at transforming compliance practices. It's a lot to digest, so we'll wrap up the new season with a special episode where I'll be breaking it all down and discuss the way forward. Stick with us for this fascinating look at the future of compliance. In his many years in financial crime risk management, Yaron Hazan has witnessed dramatic changes in global crime. He's watched new strategies develop and traditional methods rapidly becoming outdated.
So I started my career at the Israeli police. I was responsible for counter-terrorist financing investigations to address the phenomena of terrorist funding, especially after September 11 attacks in the US. Later, I became leader in PwC Israel for anti-money laundering consulting services and for forensics services. So I was there 7 years. I had the privilege to help in a very interesting project in 2012 as part of my role to help
Major bank
to do KYC remediation and re-review risks of their corporate customers. 2 years later, I joined
Major bank
and became the head of compliance for the banking activities in Israel. In 2017, I actually got to be independent consultant after I left the bank to help other banks, blockchain companies, and other fintech companies to maximize the potential of financial crime risk management. And I found myself quite fast working with ThetaRay. And after a few months working with ThetaRay, I helped the project. When I saw the results of the project, I said, okay, this is something strong. This tool is real. And I felt that after 25 years of fighting bad guys, when I had the ThetaRay insights in my hands, finally I felt one step ahead of the bad guys. For the last, let's say, 7 years, I work with ThetaRay and I'm responsible for all the engagements that we have directly with regulators, thought leaders, FATF, Bank of International Settlements, and of course, regional and country regimes, FIUs and central banks. And in addition, I lead a team of financial crime experts that help our customers and our technical teams to bridge between the technology, the business understanding of the financial services, and the principles of financial crime risk management.
And Yaron, what's been so different about the ThetaRay approach that you mentioned that made you feel this is a game changer in combating economic crime?
So the challenges of the industry in the past, let's say, 20 years started, I think, because the criminals already know what the financial industry is trying to do to avoid financial crime. And they have this weird phenomena, the criminals, they just don't want to get caught. So some of the risks that financial institutions faced seemed almost impossible to manage. If you look, for example, on correspondent banking, trade finance, some kind of cross-border services that pose inherent risk and were actually inherent weaknesses in the global chain of financial services, it was always like that. The banks that provided services at the early 2000s embedded some controls in place, which were whatever you could find in the market back then, all of them actually, a rule-based approach. And they mainly tried to focus on the common services, while correspondent banking, trade finance, and cross-border activity was too hard to manage. What we've seen the last 20 years is that globalization made economy almost one large area. Earth is a one large shopping center. So trade evolved, cross-border payments evolved. So this ability to manage risks on those large-scale global activities became not only a weakness to the financial system, but a big opportunity for the bad guys. They have already proved that they know exactly how to bypass the current controls within the financial industry. So the challenges are enormous because the controls are as bad as they were 20 years ago. And even then, the bad guys knew exactly how to bypass them. But now the opportunities for the bad guys are almost insane how easy it is to launder money today.
Maybe just double-clicking onto that, what else would you say have been the big changes in financial or economic crime over the past decades? Are there also more technology advancements, more sophisticated crime patterns?
So globalization gave society a lot of good things, business opportunities and financial efficiency opportunities, and the same goes for the bad guys. The globalization enabled them access to many of the financial infrastructures that help them move funds faster, quicker, easier, under the radar, whether it's for drug trafficking, terrorist financing, laundering huge amounts of money, human trafficking, etc. And the opportunities for them, for what we may analyze today as sophisticated fraud schemes, but for them, it's like simple. Imagine that this is your work and all you do is just explore the holes in the wall and the weaknesses in the chain of financial industry or banks and the network of banks. So when you're focused on that, you can easily find a lot of opportunities and do things in a very easy manner.
How does ThetaRay now help in this?
When I was with the ThetaRay team in 2017 at one of the largest banks in the world, and we were asked to analyze 200 million
banking system
messages to identify exposure to the Russian laundromat scheme. And it was so easy for me to learn the pattern of how exactly those guys launder the money because what the system taught me. So the AI, the machine learning approach, takes huge sets of data and shows you quite fast what is unusual and potentially suspicious within it without you predefining the set of rules or whatever you want to detect. This is the unique thing about it.
And if we go a bit more into the problem statement, you mentioned that it's very hard or even close to impossible for banks to always be ahead of the criminals whose main job it is to play the system, if you will. What would you say are the key challenges we as an industry are now facing in getting ahead of financial crime?
Albert Einstein said once that insanity is defined by doing the same things and expecting different results. So the challenges that the industry is facing is that complex problem that embeds multidimensional perspective and many angles to look at in order to understand that there is a risk to begin with. The banking industry and most of the financial industry used to put defenses that are 20 years old, and even then they were not effective. Now, the fact that it is very clear, it's not only to me because I'm unique or in this industry for 25 years. If you read the guidance notes or the recommendations or even the regulations and the formal messages from thought leaders, it's a common knowledge that the industry is far behind.
What then do you think needs to change across industries, and how do you think AI can factor into that or help with that?
The industry needs tools that will help detect simple and complex schemes in a timely manner. If you have such tools, and you have that approach, by the way, now I think most, if all banks do have the approach, So all that is missing for them are the tools. What it will do with using AI, it will shorten the time it takes, one, to detect and identify suspicious patterns by the private sector. Second, if detected by the private sector, by the financial service providers, financial institutions, etc., to report it in a timely manner. But the loop should be closed also by law enforcement agencies and the FIUs in the world to act upon it. Because today, one of the challenges is that even when a bank identifies, let's say, a suspicious pattern or suspicious group of activists, until it's been acted upon by the FIUs, it takes too long. So common rule-based approach never succeeded, and it only gets worse because the problem is more complex. So bad guys still have the upper hand until AI will become like the key element that they need to face.
And what do you think regulators and supervisors can and maybe even need to do in order to help the private sector institutions?
The regulators play a significant role. And the way regulators approach the problem shows several things. One, they acknowledge the problem. If you look at all the official publications by the European Union, European Banking Authority, specific local regulators, US regulators, all of them acknowledge that the current reality is not good, that there is a significant place for improvements, and they all push to use artificial intelligence and sophisticated tools in order to get this improvement. So I'm not the only smart guy, and of course, they already understand it. So if you look at steps that already were taken, for example, the EU is establishing the AML authority, AMLA. The AML authority, why is it so important? It will bring at least one supervisory arm that can go to different countries and ensure that the standards are as high as possible. If you look at the
major bank
case, there were branches in a certain country in Europe that were identified as the weakest link in the chain of banks. And all the bad guys need are the weakest link. So being able, as the European Union, to go into specific countries and ensure the standards are as high as possible already shows that they understand the materiality of the problem. If you look at the recent publication by Wolfsburg Group, they already published in 2019 their approach that banks should stop redundant controls, and it was obvious that they refer to AML transaction monitoring. Now what they have done, a few years later, they've published the suspicious activity monitoring guidelines, and they call exactly for the use of data, the use of technologies, the use of machine learning, the use of AI, to make sure that the controls that the financial institutions implement are effective, are fit for purpose. But then we can also look at the ACPR as example. The ACPR, the French regulator, published a few guidance documents that are very detailed, that explain the financial industry how to use machine learning AI in a responsible manner. It enables banks or fintechs to move in confidence that they know what they are doing, that they know what the regulator expects them to do when they apply machine learning AI, and then they adopt it faster. Now, as I describe it, you can see that it always used to be like a game between regulators and the financial institutions, one step forward, two steps back. But today, I think the financial industry and the private sector already realized that if you already invest so much and the cost of compliance became really significant for the financial institutions, if you already pay so much, if you do it because it should serve humanity and protect against human trafficking, drug trafficking, terrorist funding, etc., why don't I do it right? Why shouldn't I do it in the best way I can? And on the one hand, morally achieve what I was supposed to achieve and defend society from bad things. On the other hand, show the regulator that I understand what I do, and at least I try to do it the best I can using the AI and machine learning. So once regulators, like the FCA, are more open and do roundtables with the private sector and have some open discussion on the challenges and the ways to tackle those challenges that the industry faces, I think we can be in much better shape. So the role of the regulators is significantly important.
How do you think regulators and supervisors can do more in terms of cooperative efforts rather than just policy making and then supervising banks, but more cooperation with the private sector? Part one. Part two, on this innovation, and let's stay with transaction monitoring. How do you think it's possible to get the AI and innovation in, whilst at the same time a lot of the regulation is very prescriptive on red flags and prescriptive rules? How do you think this AI-driven approach, data-driven approach will take over compared to what we classically know for the last 20 years, very rules-based?
Those are exactly the right questions that if we have good answer for, we can really move forward as society. So I'll start with the first one. Between regulators and the private sector, there is a lack of trust. Currently, in correspondent banking relationship and cross-border payments, there is also a lack of trust between financial institutions themselves. And if you think about it, the financial services as infrastructure, critical infrastructure for global society is built on trust. I trust another bank to forward money to somebody that the other bank has done KYC on and due diligence because I don't know all the beneficiaries all over the world. So definitely, the starting point to improve the openness and the trust between regulators and the private sector is with what we tend to forget as human beings. The most critical thing in relationship is to listen. So if we listen to each other, we can easily understand if the other side is really trying to do its best and if the other side has the ability to do much better, and how we, as regulators from that point of view now, can guide better, can collaborate better, and can help. For the second part of your question, yes, I read like hundreds of regulatory guidelines, AML regulatory guidelines from different territories, and I agree. In many of the cases, even the most advanced regulators do publish lists of red flags that throughout the history were translated to rules. But when you check it a little bit deeper, 1, the call for a risk-based approach. 2, the call for effectiveness. 3, even if you read the actual red flags, rules could not really address them. In reality, most of the red flags or the scenarios published by regulators are complex and none of them can be totally covered by a rule. And the regulators themselves call for risk-based approach and not rule-based approach for effectiveness and looking at the outcomes. So I think the industry is mature enough, especially when AI became a common thing and not like something very unique that you don't know how much you can trust, to understand that if you have the ability to detect a complex pattern, evolving pattern, new, unknown way of doing criminal thing, you're not allowed to stick with an old list of red flags that never proved to be effective. To the point that you asked about the common practice of following red flags can be addressed together and give enough comfort to everybody, to auditors, to regulators, to the compliance officers, and to the business leaders.
Now, another topic that I think you mentioned, which I think the challenge then still is, if supervision still happens 3 to 5 years after the facts, and you can still be called out for a single transaction that might have been a high-risk jurisdiction or a high amount, it still, I think, creates a lot of nervousness in the industry around, do I still need to hang on to rules, as well as with a lot of the management who are very classically trained, a feeling of, if I see a rule and I see that my team is looking at every rule or every transaction of a high amount, and that relates to a rule, I feel safer. And leadership is thinking in that way and understands rules better than machine learning models or statistical models. I think we're still working with that old challenge of, we understand that innovation needs to come, but for some reason, it's very hard for us as an industry to unlock that innovation.
If the coverage of financial crime detection was mainly by rules, in the last few years, rules and a little bit of AI, within a few years, the circle of AI will be bigger and the rules will remain, but in a very, very small portion of the common practices. That's my view.
And I agree. I think rules are going to stay, but at some point, I hope that they'll become a backstop that actually doesn't need to be triggered over time in the future. Yaron, what are some of the macro trends you see with some of your clients? Are they looking a lot at innovation or scalability of their approaches?
I say that some of the largest banks in the world already work with us for a few years now and implemented it like since 2019 or 2020. So all of them say that they have meaningful detection today. That means very, very high likelihood that it's a criminal activity. I see that banks start more and more detect complex schemes, and when they report it to the regulator, even receive positive feedback on that. I've seen cases that using AI, banks were able to reveal human trafficking and terrorist financing. So it's a bit more angle on the typologies or the actual crimes themselves and less on how high or what was the amount that was transferred to a high-risk jurisdiction as the something you are trying to avoid or scared of. The risk is not the move of the money to high-risk jurisdiction. The risk is that it serves human trafficking or terrorist financing or drug trafficking. So I see more focus on the predicate offenses. And we just won an award together with Santander Bank for the best use of data to detect human trafficking. I see that there is an increase of trust between financial institutions, and it starts to show also between FIs and regulators. And the most amazing thing that I never thought that I would say, that for the last 2 years, our customers testify that we add business value and business growth. We were always considered a cost center, and definitely not a profit center, and usually not an engine for growth. But what the banks say, that if they trust their controls, they can move faster and they can bring more business because they know that their systems will detect the risks. And I think that's a dramatic feedback that we received.
What's your final advice to both public and private sector people as they take on the evolving criminal trends in the future?
So first and foremost, keep your eyes open. We already see some new trends of potential criminal activity through crypto, but also through the traditional banking or the new fintech services. So don't stuck with the old methods, especially if they do not work. The second thing I would say, collaborate. When you see the round tables and the open discussions the FCA is leading from time to time with consultants, banks, and lawyers and whatever, you can see how it helps, because then you can really deep dive into the challenges and you are not afraid to manage the risk. The last advice is to use techniques that can and will reveal severe and evolving typologies of crime. Because none of us in the financial sector, in any kind of business, want to support terrorism. None of us want to support child trafficking. None of us want to support drug trafficking. We know what it does to society. The society is us, globally. So I think that my advice would be to focus on effectiveness and to help society avoid those issues.
That was Yaron Hazan, VP of Regulatory Affairs at ThetaRay. Is your organization evolving its financial crime approaches? Join the conversation by connecting with us on your podcast app, writing a review of the show, or emailing us at bcgoncompliance@bcg.com. Be sure to subscribe to get more insights from compliance innovators.